Oh, we're back. We're back with another one. Man, how y'all feeling? I hope y'all are feeling good after that banger we had on this morning. Oh yeah, we killed it, man. So we're gonna take a look at the markets though and see exactly what the markets are doing right now, which is nothing but consolidating ever since that big move. And so we're not thinking about engaging. We're not gonna engage at all. But welcome back, man. Welcome back to New Level Academy. Welcome back to New Level Traders. Y'all know how we get down. So let's talk about what we got to talk about on today, which is basically not my 401k, right? Not my 401k. I told you all earlier this morning, I was saying, hey, this morning, I want to dive in a little bit more as it pertains to not my 401k due to the simple fact of they're going to be implementing SpaceX into your 401k. Those of you who don't have control over your 401k, get ready for SpaceX to be into your 401k. So I'm going to play some audio of, and I'm pulling it up right now. I'm sorry, y'all. I didn't get a chance to kind of be prepared. Uh, and reason for that is due to the simple fact of like I was preparing dinner for the family, so um, trying to have that going and get that going. I had did a uh I did lasagna in the crock pot. So that was kind of like my first time doing that. So I've been a little bit focused on trying to get that taken care of without screwing it up, right? So now that we have that out the way, I want to dive into what we were talking about when it comes to not my 401k. And one of the things it is of what I wanted to talk about most was SpaceX, right? Having an understanding of SpaceX and what's tied to SpaceX, um, it makes us think a little bit. I know it gives me an opportunity to be able to be patient and see how things play out, right? When it pertains to this. But I want to play some audio for you real quick as we look at SpaceX and kind of go over the numbers real quick and listen to the CEO Larry Fink talk about this. And I'm not sure, if Larry, because Larry is very important as it pertains to this. And this is why I say that. I mean, they're the biggest, he's the CEO of BlackRock, biggest asset manager in the world. And so when he speaks, it's kind of like, hey, pay attention to what it is of what he has to say because he's not going to tell you anything to throw you for a loop. He don't have the time. He don't have the time. So when a person don't have the time and they're talking about things that are very 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 important, so sometimes we should just take a listen. So let's take a listen to what Larry Fink had to say as we look at the charts, right, and just see how these things are playing out on the chart. Look at the consolidation of what happened and took place right here in the market. You see that after that big move of what we caught this morning, just look at the consolidation that's here. We don't like that. So we don't engage in that. So we're not going to be engaging going today into the market. Obviously, we made our money this morning. Those of you who were with us, um, Congratulations to you if you was with us to trade. If not, then another opportunity will come and present itself in the market for you to be able to get that opportunity. Yeah, another opportunity will present itself in the market for you to be able to get your opportunity. Okay?
Awesome.
So let's hear what Larry Fink had to say.
The world's largest asset manager, now overseeing $11.6 trillion, that's with a T, under management, beating on the top and bottom lines. And I spoke to BlackRock chairman and CEO Larry Fink in an exclusive interview and asked him about the alternatives business, which is a big new priority for the firm.
It is my belief for democratic economies to continue to grow and Western economies to continue to grow, we're going to have to rely more on the private sector. And the brilliance of the United States economy is based on the capital markets. And that's the role of CNBC to talk about all the different things in the role of the capital markets. We have the broadest, deepest capital markets in the world, and that's why a startup company, a small company, a medium company, a large company has access to capital like nowhere else in the world. And we underestimate the power of our global capital markets and mostly the U.S. capital markets. It is my belief that capital markets are going to become a larger and larger economic engine here in the United States and all throughout the world. I said in the editorial that we can't rely on deficits. I mean, we don't talk enough about our deficits right now. And I do believe we're going to have to rely more on the private capital, private sector. That's what President Trump's talking about in some of the new policies, and we'll see how that rolls out. So if I had a crystal ball, I would tell you right now that the sectors that are going to grow the most in the capital markets in the private space will be infrastructure.
1 year ago, just this week.
What he talks about here, right? He said where the capital is going to grow in most is in that is infrastructure, right? Where capital is going to pour in most is into companies that are like this. Right, hold on. Here we go. And let's look at this from not the crypto space, but let's just look at it from the Nasdaq itself. Here we go. Let's take a look at it on a 4-hour chart. We still have it charted up, right? So a lot of capital, he said, is going to be going into the infrastructure space. Infrastructure will be the largest growing sector in private capital. So what is private capital? And where is that private capital going to come from? That private capital is going to come from your 401k. Jeremy, what do you mean by that? Listen, let me tell you exactly how this goes. And this is why I said, man, if you are a person who is on a job and you have a 401k, and say, for instance, you just allowed them to control your 401k and you have no control over your 401k at all, period, you're going to be that private capital of what they're talking about. They're just going to automatically start investing you into companies that they see fit. They're going to do that. And you could choose to believe it or not, but I want to show you when you look at companies like SpaceX, right? Think about it. Valued at 1.7 trillion. 1.75 trillion. But when you look at the numbers, let's just take a look at the numbers, the TTM. Total revenue, they did 19 billion. Last year, right, prior to IPO coming out, they did 18 billion 674. And you kind of have to ask yourself, okay, are they profitable enough for us to be able to start engaging early, or or are they overvalued as a company? And they're going to need more capital. That's why they only released a certain amount of shares to the public, and they're going to do it over time. And they put a control over the fact of, well, you can't sell at this given time frame. You have to hold the bag. So everybody who's holding the bag, they were able to see what? They were able to see an explosive move, but look at the retracement coming back. You're literally trading below the golden zone. And we already know once we get a break below the 50, it is a wrap from there, right? So who took profits here? Who had the opportunity to take profits there? That's a real question. I want to know who had the opportunity to take profits here. Because once you start to understand that, like, okay, if this breaks below $150 and we start literally trading lower, you could bet your bottom dollar that it's going to open up your eyes to be able to see, darn man, I shouldn't have got in. I got in too late. Think about the buyers who were trapped up here, who bought in at 225, 216, and they're still holding the bag. Ouch. Ouch. So let's take a look at something real quick. Let's just take a look at something real quick, right? And I'm going to pull this up before we start doing our analysis. But let me pull this up real quick so that we could look at this together. And I want to ask this question to Gemini. It's going to be a very fair question to be able to ask. But it's a certain way you have to ask them. So I'm asking this question here. When it comes to sure, okay. Booting. Okay. So I just asked Gemini this question. And check this out. Here's the question, though, of what I asked. I said, when Larry Fink discusses the private sector when it comes to infrastructure gaining the most capital, is that including my 401k, which is private sector capital? Private sector capital. Is that including my 401k? It absolutely is including your 401k. And look, I'm going to show you exactly what it says. I kid y'all not. This right here blows my mind. Look at this. It says, yes, absolutely. When BlackRock CEO Larry Fink talks about unleashing private sector capital to build global infrastructure, your 401k, along with millions of others, is exactly what he has his eyes on. When people hear private sector, they often picture billionaire tech moguls, venture capital firms, or massive investment banks writing checks. While those entities are involved, They don't hold nearly enough cash on their own to fund the massive trillions of dollars required for data centers, AI power grids, energy pipelines, and transit hubs. Instead, the true powerhouse of private capital markets is institutional, aggregated savings, corporate pension funds, sovereign wealth funds, and individual retail retirement accounts like your 401k. I told you. I told you. So nobody could sit here and try to tell me something that is completely oblivious to what is happening right here before your very eyes. When we sit here and have this conversation and this discussion, most people can't grasp or stomach this here. It's tough for them to be able to stomach this because they have no control, or they have not done the work possible, right? They haven't done anything at all possible to even go and have a hand within their 401k. So now your 401k, that capital is going to be used and is going to be exposed into the infrastructure of building these data centers. These big IPO companies like SpaceX. This is where your capital is going. So if you are a person who cares about, how could I say this? If you care about your 401k, guess what? You better bet your bottom dollar that you need to be going in and you need to be having a discussion with whomever at your job when they have this conversation, when they talk about these things. Now, we're very anxious to go to your front office and talk to them about your 401k. This should make you very anxious. And if you don't catch it, you're going to be the one missing out. You're going to be the one missing out. So don't set yourself up for that. Put yourself in position to win. So it's your boy Jeremy, man. I love you all. Thank you for another video, and I'm out.